Hello everyone, thanks for checking out my video. Despite retreating last Friday, the S&P 500 had closed at a record high for a total of 31 times this year. I repeat, it's 31 times. Mind you, we still have half a year to go. Just how high can this stock market go? The interesting thing is that as stocks continue to climb higher, Wall Street analysts have been scrambling to revise and increase their year-end forecast for the S&P 500. This simply shows that no one can accurately predict the market direction, and all we can do is to go with the flow. Speaking of going with the flow, I will be covering this method of investing and trading in this video, so do stay on to find out more. So, with double dose of inflation reports and the Federal Reserve meeting behind us, the US stock market continued to rally last week despite a holiday-shortened week. The likely reason is because there were few or almost zero negative catalysts to bring the market down. But on Friday, the technology-led rally showed some signs of fatigue and weakness for the first time in over a week, as major indexes pulled back a little. Notably, Nvidia was down more than 6% in just 2 days. However, just to highlight, this retracement came after the S&P 500 hit 31 times of record close, and Nasdaq had its own 7th straight day of record closes. In other words, last Friday's retracement was a much needed break for the overextended market. Furthermore, last Friday was Triple Witching Day, where lots of stock options, stock index options and stock index futures options expire. That event had definitely contributed to last Friday's market volatility. For this week, it looks like a pretty quiet and loud week again. The only major or potentially market-moving event will come on Friday, where the Federal Reserve's preferred inflation gauge, the Personal Consumption Expenditures Price Index or PCE, will be released. This PCE reading is definitely a significant economic indicator after another inflation data, which is the Consumer Price Index that came out earlier this month, showed that inflation has cooled during the month of May. Therefore, if PCE reading also indicates a cooling of inflation pressure, it will be good news for the market, as that will give the Federal Reserve another reason to cut interest rates in the months ahead. The current market expectation is that the first cut will come in September. Therefore, a favorable PCE number will further boost this hope and probably confirm the forecast. But of course, a hot PCE reading could complicate things a little bit, as stubborn inflation could push back the rate cut to a later date. On a side note, the US presidential campaign is going to heat up, as both candidates, Joe Biden and Donald Trump, will go head-to-head on CNN. Investors will be keen to find out their views on the US economy, tax policy, role of the Federal Reserve, job market, and other economic issues. This will likely not affect the market much this week, but I think it's still good for us to know their views and have a sensing of what could happen to US economy if either one of them gets elected. Let's now move over to the technical analysis portion. As usual, we shall begin things off with SPY, which represents the broader market. For this week, there is one key level to watch on the chart, and that is 542. Why is that so? Because that is the critical 161.8 Fibonacci level. We had a breakthrough last week as SPY went above this level. But as of last Thursday and Friday, it looks like SPY wants to retest this level at 542. I have shared quite a number of times, if we get a retrace, retest and a bounce, that is very bullish. So if SPY bounces off 542 this week, there is a chance for the market to continue to grind higher towards 550's range. The next meaningful resistance lies at 555, but just a quick disclaimer, the route towards 550's range may not happen all in just 1 week. On the other hand, if SPY does not bounce off 542, I would say there is a high probability we will slowly grind towards the gap area between 535 to 537. If this happens, it's actually quite healthy for the market, simply because the market cannot just keep going up, it needs to take some breaks and breather. Anyway, watch for potential bounce at the gap area. If not, then the next meaningful support is at around 529 because that is the critical 61.8 Fibonacci retracement level. If SPY can retrace back to this level within these 2 weeks, I would definitely be happy and may look at my watch list again to see if there is any stock that I can pick up. Moving over to Apple's chart. Well, since Apple hit the critical 161.8 Fibonacci level at 220, it has been pulling back. Not trying to scare you, but the pullback may not end here. First of all, the RSI had a bearish divergence and it had played out last week. But will it continue this week? We don't know. But I think we should not rule out the possibility that such divergence can continue for a while more. Secondly, the MACD is about to have a bearish cross, but it is not confirmed yet, so watch this MACD carefully this week. Thirdly, with the latest pullback, we have hit the first support level of Fibonacci retracement level at 207. Typically, a pullback after a parabolic run-up will not usually end at just the first support level. It may extend to the second Fibonacci level, which is around 199. Okay, pay special attention. This 199 to 200 range is a very important area that the bulls have to protect, because not only it is where the second Fibonacci level sits, the level 200 is one huge psychological level that Apple had difficulty breaking above previously. This level has since turned from a resistance to a support level now. But this also means that if this support level breaks, we are back to where we were previously, and I would say Apple is quite bearish below 200. All in all, watch this big 200 level closely, alright? Okay, all the earlier bearish thesis could be invalidated if Apple somehow managed to bounce off the very first Fibonacci level at 207, and with MACD curling back up again. When that happens, we can expect Apple to retest 220 again, which also means we could see another all-time high. Well, my honest and personal opinion is before we reach the earnings day in July, I see very few catalysts to drive Apple above 220 at the moment. But that's just my take, I could be very wrong. Okay, let's now move over to Tesla. Tesla is looking potentially bullish. Note the word potentially. Okay, I know it may sound a little crazy to go against this bearish trend of Tesla, as among the Magnificent 7 stocks, only Tesla is down year to date. And it's not down by a little bit, it's down by more than 25%. Well, that's the thing about technical analysis, it gives you an objective view. So I'm just gonna present what I see on the chart without any biased view. First and foremost, we have a bullish double bottom pattern formed in the short term. In fact, if you log on to Moomoo via your mobile phone, you will be able to see that Moomoo has already drawn it out for you. Okay, this is not a sponsored post, okay? Anyway, there is a caveat. For this double bottom pattern to be confirmed, it needs to break above the 187 resistance level decisively, which Tesla did attempt to do that, but it seems like it is struggling for this breakout. So come this week, watch this 187 closely. A breakout above this level means we could touch the level 200. Next up, another potential bullish signal is Tesla seems to be trying to break above this blue dotted downtrend channel line. Again, it was also struggling a little bit as it retraced back to retest this line. But remember what I shared earlier, if we get a retrace, retest and bounce, that will be bullish. So this week, watch if there is a bounce of this blue dotted line. One more thing, as I zoom out the chart, you can see that Tesla has been creating lower lows since August last year. And this period is the very first time it had created a higher low. So if this higher low, which is around 168, can hold in weeks to come, then there is a chance for Tesla to grind higher. Okay, before I move on, quick shout out for support please. I really hope to grow this channel further, so if you have found my content useful, do consider supporting the channel through any of the following options. You can buy me a coffee, a YouTube super thanks, or just simply tap on the like and subscribe buttons and share my videos with your friends. I mean, they say this will help to boost the YouTube algorithm. Alright, back to business. On the other hand, in terms of the bearish thesis, it's basically the opposite of whatever I have shared for the bullish confirmation. Specifically, if Tesla fails to break above 187 to confirm the double bottom pattern, fails to bounce off the blue dotted channel line, and worse still, fails to clinch on to the higher low, then I would say be prepared to see 150's range. But before that, pay special attention to one level, and that is the 50 moving average. This level has been really solid. It has held up very well ever since Tesla started to consolidate within this range of 168 to around 185. Therefore, if this level gets breached, I believe Tesla could spiral downwards. Finally, to be honest again, I thought Tesla would have had a bigger movement after the squeeze-in Bollinger Band, but it only went as high as 191. Well, could the big movement been delayed? Will it come later? Or that was it, jumping from a low of 168 to 191, a difference of 14%, and end of story. Well, I really don't know, no point guessing too much as well. Since Tesla decided not to have a huge movement for the last 2 weeks, I went with the flow by selling a new covered call to make use of this sideways movement. More on this later in the options trading section. Moving over to Google's chart, there is actually nothing much to update for Google as it continues to move within this green dotted uptrend channel that I have drawn long time ago. Anyway, in my last video, I shared that if the MACD crosses up, then we will have a chance to test the all-time high again. But MACD did not cross up, which means this thesis is still valid for this week. So if MACD crosses up this week, we can say hello to another all-time high. So watch it again this week, alright? But if we want to see real solid bullish momentum from Google, it needs to break out of this green dotted uptrend channel. It did try to do that on a few other occasions, as you can see from the chart, but somehow it did not succeed. So let's see if it can do it this time. Also, in my last video, I mentioned that if the MACD didn't cross up, watch for 173 as the first decent Fibonacci support level. Reason being, Google has been trading above this level since mid-May, with only one exception where it briefly fell below 173 and kissed the 38.2 Fibonacci support level. And so Google has proven what I have shared, as it continued to float above 173, showing that it is indeed a decent support level. Once again, watch this 173 as a support level this week. If 173 breaks, don't panic. I will only be on my toes if the next support level breaks, which is 169. This is because 169 is where 3 support levels converge. The first one is the 50 moving average, the second one is the 38.2 Fibonacci level, while the third is the green dotted uptrend channel line. Personally, I think this could be one good area to sell cash secure put. Not financial advice, okay? Let's now check out Meta's chart. Well, I mentioned in my previous video that if Meta couldn't break above 513, it may just chop around the range between 482 and 513, and there is a chance for Meta to hit below 500 again. Ladies and gentlemen, Meta is at 494 now. Okay, if you are a bull, be very wary this week. First of all, as mentioned earlier, the bottom of this consolidation range is 482. This means the pullback in Meta may not have ended. Don't be surprised if we see 480's range. Secondly, check out the MACD. It is on the verge of crossing down, and when that happens, I would say it is a very high probability that Meta is trading in the 480's range. Okay, here's one very important area to note for both the bulls and the bears, and that is 478 to 482. Other than being the bottom of this consolidation area, this area lies a number of key support levels, and they are the 50 moving average, the 100 moving average, the critical 61.8 Fibonacci level, as well as that little gap. The bulls would of course want this area to hold and probably are confident that this area will hold given the number of support levels. On the other hand, if the bears can somehow push the price beyond this area, I'm not kidding you, but I think just my view, we could hit towards low 460s, and from 480s to 460s, that's a good 20 points drop. So to summarize, watch this 478 to 482 area closely. This is one area that I am potentially taking some actions to either trade options or pick up shares. Not financial advice. Alright, in terms of the bullish thesis, if somehow Meta can reclaim 500 level, that's good news for sure. But I would only say Meta is bullish if it can close above 513. Finally, let's now move over to Microsoft. Wow, Microsoft is looking very bullish since it broke out of the consolidation range of 390 to 430. It basically continued to stay above that range and make things even better by creating all-time high on a few occasions over the last 2 weeks. Currently, it is hitting a resistance level at around 451. It tried to go above it on 3 trading days but couldn't do so. For this week, watch if Microsoft retests this level again. And in the event that Microsoft somehow managed to break above 451 with higher than average volume, again I have to say this again, the sky would be the limit, because whenever a stock hit all-time high, sellers tend to dry up. If you were to ask me above 451, the next real strong resistance is actually the 161.8 Fibonacci extension level, which you can't see on the screen and I had to manually calculate it myself, and that level is 479. Okay, before you get all too excited, I am not trying to say that Microsoft will jump to 479 in just 1 week. It takes time. It can be weeks or months, we don't know. But the point here is above 451, it is just a matter of time that Microsoft will grind towards the 470s range. On the other hand, if it somehow decides to pull back for a breather, just note down those Fibonacci levels on the screen. They are all support levels, which means they are all potential bounce areas. But I just wanted to bring your attention to one level, and that is the 422 level, where the critical 61.8 Fibonacci level sits. If Microsoft ever gets to this level in the next 2 weeks, I will be on standby to pick up shares or perhaps sell cash secure put, and both are bullish moves. But of course, the risk is that if this strong support level breaks, we may just head towards low 400 again. Therefore, please know your risk before making any trades. Okay, let's now move over to the options trading section. 2 trades to update this week. First up, it is this covered call on Tesla that expired last Friday, 21st June. The contract was sold on 8th of May this year with a strike price of 190. The reason for this trade was very simple. Tesla was lacking positive catalysts to push the stock higher. That period was actually the post-earnings period, and there wasn't any key event coming up for Tesla except for the recent shareholder meeting that took place on 13 June. That's why I was of the view that Tesla could move sideways till the shareholding meeting. And true enough, since I sold the call contract, Tesla has been moving sideways for 1 full month, till right before the shareholder meeting. That was when the share price did spike up a little bit, but it wasn't sustainable as it fell back down. By then, time decay had taken effect and the contract was worth very little money, and I could have closed it anytime to take profits, which I didn't. So anyway, last Friday, Tesla closed below 190, which means my contract expired worthless and I got to keep the full premium of $535 without having to close my position. The next trade to update is a new covered call on Tesla that I sold last week, 17 June to be exact. The strike price was the same as the earlier contract, which is 190, and the expiration date is 26 July. Again, the reasons for selling this contract were plain simple. First, it was because my earlier contract was expiring and I decided to sell a new contract with the same strike price to milk some premiums. In fact, the premium is very juicy for this trade at $1,085. But a quick disclaimer, I have not realized this profit yet. The next reason is what I have shared before. Basically, I was previously assigned with 100 shares of Tesla at $190 per share. Therefore, by executing this trade, it means if Tesla closes above 190 on expiration date, this 100 shares will be caught away, which I am okay with that. Anyway, Tesla is still moving in this tight range, and the longer it stays within this range, the more likelihood that my contract will expire worthless. Which means come expiration date, I may get to keep the 100 shares as well as the $1,000 premium without having to close my position. But of course, I will continue to watch the stock price movement closely, because if Tesla turns bullish, I can choose to close my contract to realize some profits. Alright, remember at the start of the video, I mentioned about going with the flow. Okay, first of all, I don't think you need me to tell you that the current market flow is up and bullish. This means any form of pullback is against the main flow. And when such pullback happens, it is the time where long-term investors should consider stepping in, hopping on the boat before the market resumes its bullish flow. For instance, Nvidia had pullback for 2 consecutive days. If you have been eyeing this stock and believe in its future growth, you should consider setting a price target, and the moment Nvidia hit that price, you should step in already. Otherwise, you will find yourself waiting for it to go lower and lower, and before you know it, the price will go back up again. I mean, don't forget, for the last 6 months, every single dip has been bought up by investors. And every decline in the market did not last long, so seize the opportunity. Okay, but a quick disclaimer, this is not any form of financial advice, alright? Anyway, if you had watched the earlier segment of technical analysis on Tesla and also my options trade, you would know that I was anticipating a big movement from Tesla after a Bollinger Band squeeze. Well, it did kind of happen with a 14% difference between the highest and lowest point recently. But the movement wasn't as huge as I thought it would be, as Tesla continued to trade within a tight range. So what did I do? I went with the flow, and that is what I wanted to share with the viewers about going with the flow. Basically, the flow for Tesla right now is sideways movement, which is different from what I had anticipated, and I accepted it. So that was why I quickly sold a cover call on Tesla. That trade is already sitting on a small profit. I mean, I could remain stubborn and be fixated that Tesla will have a much bigger breakout to the upside or downside, but I didn't. I went with the flow. The key message that I want to bring across is that technical analysis offers an indication only. It's all about probability. For example, if the weather forecast says there is an 80% probability that it will rain today, will it definitely rain? It may not. And if it doesn't rain, will you sit around to wait for the rain? You don't, right? You will probably tweak your plan according to what's happening in front of your eyes. So apply this to the stock market. Basically, you can anticipate a crash all you want. You can expect certain stock movement, etc, etc. But at the end of the day, when the market shows you a different outcome, you have to learn to adapt and go with the flow. Like I always say, let the market makers go first, then you follow along. Once again, I would like to emphasize that the current market flow is bullish despite a small retracement last Friday, and you wouldn't want to go against the main flow, such as shorting the market. But if ever the market flow changes, I will update via my videos. Okay, I hope you have learned something today. That's all for this video. Do help me grow the channel by liking and subscribing, okay? Help to share my videos with your friends as well. Thank you.